You think you're making money just because your tenants are paying more rent. But what if I told you the real wealth is hiding in the boiler room? Welcome to the brutal truth about CapEx versus rent increases, where most investors are getting the equation completely backwards. Here's what nobody wants to admit. Raising rent from $1,000 to $1,200 a month feels like winning, but replacing a 30-year-old roof might have just added $80,000 to your property's value overnight. We've been conditioned to celebrate the sexy monthly cash flow bumps while ignoring the unsexy foundation work that actually moves the needle when you sell. The psychology here is fascinating because rent increases give you that immediate dopamine hit every single month. But CapEx sits there like a gym membership you paid for. You know it's valuable. You know it's improving things, but you can't see it flexing back at you in real time. Think of it this way. Rent increases are like getting a cost of living raise at your job. Nice, but expected and easily eroded by inflation. CapEx is like earning a promotion that fundamentally changes your title, your ceiling, your entire trajectory in the organization. Let me break down the math that'll change how you think about this forever. A $50 monthly rent increase in a market with a 7% cap rate adds roughly $8,571 to your property value. Decent, but not mind-blowing. Now compare that to installing central air conditioning in a building that never had it, which might cost $15,000, but immediately repositions your property into a higher rental tier and different buyer pool entirely. You've just crossed a categorical boundary that rent tweaks alone could never breach. The misconception is that CapEx is purely defensive, just keeping your building from falling apart. That's like saying weightlifting only prevents muscle loss. It completely misses the growth component, the value creation that happens when you fundamentally upgrade the asset's capabilities. Here's where the cycle gets interesting. In hot markets, everyone chases rent growth because it's visible and immediate, driving up acquisition prices to levels where only rent appreciation can theoretically justify the purchase. Then the market cools, those rent growth assumptions collapse, and suddenly everyone remembers that the buildings with new mechanicals, updated units, and solid bones are the ones that hold value. I've watched investors celebrate 3 consecutive years of 5% rent bumps, thinking they're geniuses, only to face a $40,000 roof replacement that wipes out years of those gains because they have no reserves. Meanwhile, the investor who proactively spent $60,000 on a new HVAC system 2 years ago just sold at a premium because their building suddenly became the safest bet in an uncertain market. The community knows this intuitively, even if they don't always act on it. Talk to any operator with more than a decade of experience, and they'll tell you the same story. The deals that made them the most money weren't the ones with the best rent growth. They were the ones where they bought dated properties, invested heavily in smart CapEx, and repositioned the entire asset class of the building. Warren Buffett has this quote about price being what you pay and value being what you get, and it applies perfectly here. You can raise rents all day, but if your property still has galvanized pipes and knob and tube wiring, you're just polishing a fundamentally limited asset. Let me hit you with a cold reality. In markets like San Francisco or New York where rent control exists, CapEx isn't just important, it's literally the only value creation lever you have. You think those investors are sitting around hoping for rent increases they legally can't get? The contrarian truth that makes people uncomfortable is that excessive focus on rent growth often signals an investor who doesn't understand their property's physical plant. They're optimizing the wrong variable because they don't want to open up the walls and see what's really there. Historically, the properties that survive recessions and maintain value are the ones with deferred maintenance addressed and systems upgraded, not the ones that squeezed every last dollar of rent while the infrastructure crumbled. I learned this the hard way watching buildings I passed on because the rents were too low, get completely renovated and repositioned while I was busy celebrating my 2% annual increases on a depreciating asset. The pattern is predictable. CapEx creates step function value increases that rent growth can never match in the same time frame, especially when you're talking about upgrades that change the fundamental use case or tenant profile of the property. You're not just collecting more money from the same pool, you're accessing an entirely different pool of higher quality tenants and buyers. Here's your action plan. Stop thinking about CapEx as a cost and start modeling it as the highest ROI growth investment in your portfolio, because in most scenarios, Strategic property improvements deliver multiples on your money that rent increases simply cannot. Build reserves aggressively. Plan your improvements strategically around market cycles and tenant turnover. And remember that the investor who controls the physical asset controls the value creation story. The philosophical truth is this: rent increases are what happens to you based on market forces. But CapEx is what you do to your property to force the market to recognize greater value. One is reactive, one is proactive. And over time, that distinction determines who builds generational wealth and who just treads water. I'm completely comfortable whether you agree with this or not, because the numbers don't care about our feelings. They care about replacement cost, functional utility, and competitive positioning in the market. The investors who understand that CapEx and rent growth aren't competing strategies, but complementary tools in a sophisticated value creation framework are the ones who'll still be standing when the next cycle turns. And if you're ready to find properties where you can actually implement these strategies, head over to www.growthsense.com, where investors can find investment properties and sell investment properties in one simple directory.